Hey guys, welcome back. Hope you had a good day in the stock market. It's August 18th, Wednesday. Middle of the week for us, and we're gonna talk a little bit about the market and GME and some technical analysis. Same stuff been going on. I'm gonna go over a few different Reddit posts today that were kind of interesting. Doing the video a little earlier today, it's only 1:45, so my prediction for coming to close for GME, I don't know. I mean, the signs are looking still bearish on the hourly, so I'm not conclusive if this is the support it's going to hold or if it's going to come to a lower support like 154. It hasn't bottomed out. But yeah, sub up, like up, comment down. Happy money sticks around. That is our Twitter at Happy Money by T. All right, yeah. And then here's our Discord. It's in the description. You're welcome to join those. I share all my trades on Discord and talk about more in depth of basically a lot of stuff I share in the videos, but go into all sorts of stuff. So here we go. SPY, yeah. This divergence that I missed yesterday, that I wish I didn't, led to this sell-off here, and then this epic rebound. And today we're just kind of continuing this pattern. Excuse me. So on the hourly, it's like, oh, it's not very clear. I mean, you have a MACD that's bearish. Price actions kind of come up to the 9, but then if you look at the daily, it's like this is a little more telling of what might be happening. We've got a MACD that's crossed over bearish, even though this is green. The day hasn't ended yet though. SPY is kind of just consolidating really today, and so I figure tomorrow and Friday, or by Friday, we're going to be more red. I think this is probably come down and test this line by Friday and maybe break through it. But yeah, so those puts I had yesterday that I got here, and they came here and they were up 140%, and I just said I'm gonna hold these things, ride them till I die. Yeah, they're basically zero now, of course, because we're just consolidating flat. So I gotta learn how to get out of stuff. That's actually why me mentally it's better to probably just sell premium mostly, just because I'm not trying to time it as much. You can, but time is more on your side if it's out of the money or whatever. And yeah, anyways, so SPY's it's still looking bearish, man. We're under VWAP right here on the 5 minutes, bullish, so maybe come back up to VWAP. And on the hourly it's kind of a mess, but I'd say it's just consolidating really. So maybe tomorrow another consolidation, then Friday come down. Gamestop is what you're all here for, and that's what I am too. So on the daily, you're like, oh no, it's so bad. What happened? On the 5 minute, Gamestop collapsed today. The bears are winning. I actually said it yesterday's video. I expect it to be red today, and then probably bounce up towards the end of the day. Haven't had the bounce yet. Not sure if we will. Again, because it's still bearish. You could kind of say this is a bear flag. MACD's bearish. Everything's bearish. The only thing I was thinking was it's possible we're holding this support. I suppose if you do Fibonacci stuff, you could figure out maybe where it's going to hold certain support or not. So there, we kind of touched this 50% retracement right here. So, whoops, that might be it. These typically go with support and resistances, so you can just look at those to see. But yeah, and this is kind of what I was saying, 155. If we don't do this, we'll do 155, and you can see the 61.8% is right here in that 155. So it's possible it comes down here and tests that one. And here's my other marker, which it's always on the fibs, because that's where the support and resistances are naturally. So we stay above here and kind of consolidate, and then I don't know. I think we'll be okay. So my thing is, even if we're bearish, I think we'll stay above this 145, and I think we'll stay above this 145. So I think the most we'll be able to come down is, and I explained this on Discord briefly, but I think the most we'll be able to come down is this MACD, this yellow line coming down and touching the blue line, the signal. So kind of like it does right here, but it crossed over. So it would just come down, touch, and then it'll bounce off. There's no bouncing on any of these because that's the way. But anyways, because I don't think we're going to get a bearish crossover, except that would mean the momentum is fully shifting, and then we're coming down. I think we've found a floor. I think we're going to hold this until next week where we rally in this zone right here. Possibly not next week, but I'm going to be getting calls on Friday for probably the 10th of September expiration. But so yeah, if we do come down more, as long as we don't cross over bearish on the MACD, I think we'll probably bounce off of it, but it's hard to know, and it really depends on the market too. I think if the market sells off and GME could come down with it. This volume is so low. This is crazy, actually. Let's look at this. So the volume has been picking up a tiny bit the last couple days. Today I think has a little bit more volume also. Let me see. So that was 1330. So yeah, we're right on track for basically yesterday's volume. Less than 2 days ago, but about the same as yesterday. So yeah, I mean, I could have more bearish plays on it for the short term, but I get in and out of those pretty quick, unlike my SPY puts that I just hold till expiration and they're worthless. My bearish plays on GME, I'm in them and I pulled out quick, and I'll show you guys on the options. But I have the 400 shares. I have credit spreads that are bullish. Basically brings GME above, I think, 165 or so by close of Friday, and I still think that's probably the case. And then I have shares, and I did sold covered calls on them, or shorted calls basically, which is a bearish play, and I did that yesterday, right here. So I did it, in my opinion, at a great time. So first thing I saw big red under the 9 moving average right here, and we had a bearish MACD crossover. I didn't do it here or here, anywhere on this candle though, as it was dropping. Just kind of waited, had a nice big bounce back up to that 9 moving average, that trend line, and this is where I did it. So at close, if you're on Discord, I shared my trade idea. And here, shared it, and yeah, opened up, sold or shorted 4 calls of the 170 strike on GME for Friday. And I did that because I said, you know, everything's bearish. Even though we had this bounce, it's still below the moving average, and everything else is still bearish in the momentum. So yesterday's video I mentioned I think we'd probably come down and test some supports down here, and sure enough we did. And so those cover calls actually worked pretty well. I closed out of them. Like I said, I don't hold those long. I closed out of them like right here, and we made like 50% on them, which I think was like $300 or $400. So I actually have a green thing in my account. Looks weird, but I could have held them longer. The IV was getting crushed pretty hard at this point. Probably would have been even actually about the same down here later if I held them a little longer, but not a whole lot different probably. And I know 170, we probably won't cross that by Friday, but I'm scared. I'm more scared of this thing taking off. I just want to hold on tight. So that's GME. I'll show you guys the plays I am talking about. This is going to be a messed up history. Okay, so GME. So I got to turn this freaking Yaz down. It's so loud in my ears. I'll turn it up for you guys though, because it's quiet on video, maybe. GME. Ooh, bought to cover. Bought so confusing. Bought to close. I don't see any bought to close, so sold bought to open. Anyways, here it's these 170s bought to cover. That makes sense, to cover. So it doesn't say our profit on it. It's just this is dumb stuff that I miss about something like Robinhood, just the UI. Anyways, we had 4 of them. I opened them up for 2 something and closed them for, I don't know, 1 something. Build, close, yeah, closed at 95 cents, and I think I opened them for 2 something. So that's that trade. I closed out of my Hayward calendar spread because I wanted the margin buying power in case I need it for GME. I've only got 3,000 in cash buying power, which is fine. That's probably all I should get in long calls for GME that aren't spreads. Support, I opened up put credit spread on support. They have I always want to call them sport. This chart's looking really good to me. On the hourly, I like it. Kind of consolidating, but still bullish. 9 moving averages over the 180 moving average. We've got higher highs. The only thing I don't like about it is this divergence. This right here, this high, and then this is a higher high and lower on the RSI. So that's the only thing I don't like about it. Everything else still looks good on the daily, on the hourly. We've got green over the 9. We've got bullish MACD. Volume's kind of tapered, but it's holding up well. So this play is a put credit spread on it, or a 9-10 put credit spread. So basically it has to close above $10 on September 17th. So I've got a lot of time on that. That's the next option date, other than this Friday. And then Corsair, I got 40 calls. I'm gonna do poor man's covered call or calendar spreads on these. I want to go long. I want long exposure on Corsair and Rocket. Had a hard time doing this because I think the squeeze is going to cause a massive market crash, but I decided to go and do it. It's not a huge position, but what I'm going to do is I'm going to sell covered calls on it for shorter dated times. So I think Corsair is at a nice bottom here. We've got a divergence on this. I think we have one on this RSI. Yeah, we have the divergence on this RSI. Yep, we do. So here and here. And it's, I mean, it's so cheap. And it's also hitting the support down here. So if you look at that, we've got a resistance back here. This is now the new support. And so yeah, the calls, I'm not going to do cover calls on it right now because I think it's at the bottom and I'll wait for it to find a top. And I'm excited to do that. Doing it with Hayward was a lot of fun. And basically what it does is it gives me exposure to a short squeeze or good earnings or something on Corsair, which I think either could be a plausible rally, a massive rally like we had right here. And I have enough time on them. I got these for, collapse some of these. I got them for some time. Okay, got them right here. Got them for 121 days. Basically, it covers next earnings. Next earnings are November 2nd. These are December 65 calls. So way out of the money. Hey, they're up 10%. That's probably mostly just that spread. Way out of the money. But if we have a nice squeeze, this will be nice. So, and then what I'm going to do is basically when Corsair just even has like a bull run and just rallies for a bit, and then looks like it's going to kind of find a top and come back down, I'm going to sell a call at that top. This is the plan at least. Sell a call at that top. And I use the calls I'm long on to go short on calls. So I'll sell a call, and when it comes down, these long calls will lose value, but my short calls will actually gain value. And then that way, when it's kind of coming back to a bottom, it looks like it's going to rally the other way, I will buy to close those short calls and collect all that premium. So by the time, if nothing else happens and these just expire worthless, hopefully by the time it gets to that December point, I've already made these free and possibly made good money on these. Because my premium's 560, I could make that back selling calls on it. If you look, I don't have a lot of strikes, so actually this is going to be, I only have a few different months, but I can go back and forth depending on price action. So there's no premium in these right now because it's just been a dying duck, this stupid stock that I love so much. But 12 cents on the 27.5, so I would basically sell these, and I have 35. I probably couldn't sell all 35. Definitely can't sell them all right now just because you know, margin and stuff. So I get 374 for that if I sold 34 of them. And then basically if it stays below that, this one would expire worthless, and I'll just keep the premium, and it'll just make my long calls that much cheaper. I mean, it won't make them cheaper, but I'll just be making money on this position that I already have. So I'm doing that with Corsair. I'm also doing it with Rocket. Rocket Mortgage, I think, will also has a potential for a short squeeze. I've got these for the same date in December to cover earnings on 11/9, which is November 9th. If you didn't know, 11/9 was on November 9th. And these are 43.89 calls. So yeah, these are both way out of the money. Both these stocks have history of crazy price action too, though. Rocket more than Corsair, but I think Corsair and Rocket are both tremendously undervalued right now. So do the same thing with this one. Basically sell calls on these calls, and if there is a short squeeze, hopefully don't have short calls on it, and I just have long calls, and I can capture some of that exposure. What else do we do? That's it for that. Let me show you guys. I went back to look at the year to date and can't believe there were 190 million shares traded in late January. I was told there would be volume. I really liked this meme. This short squeeze I shared on our Discord. This is what a short squeeze looks like. Come and learn. This is a very small short squeeze in 2015 KBIO. Double short squeeze. It's actually kind of interesting what he did. It started squeezing, and then I think the CEO or something announced that he's recalling all his shares. At that point, he had 75% of the shares of the float, kind of like how the Volkswagen squeeze went. And that is the one challenge with this GME squeeze and why it won't play out normal, because there's not one huge position that someone owns that can just do that. It's all these retail. So that's always been the difference about GME. However, GME has a much higher short interest, I think, than any of these other short squeezes. This one, I don't even know. I looked for it. I can't remember. I'm sure that the short interest wasn't in the hundreds of percent. It was maybe 20 or something. Easy to short is not always. Short interest on KBIO is less than 6%. They still got, that's insane. So it says it's less than 6%. I'm not sure if any of this is accurate, but I mean, yeah, it was very low, very low. Oh, that's Volkswagen, but KBIO. And this thing went up 10,000. So I didn't look into it too much, but and that could be from the very bottom to the very top. But if you just look at GME's price, 160 times 10,000 would be 10,000% would be, I think it's 100. I think that's right. They move the decimal over 2, 10,000, something like that. So conservatively, $16,000 share price, and that's if, you know, that's with only maybe very, very small short interest. So when people are talking in the millions, like, it's hard to even fathom that. And just seeing this, I was like, so we're at 16,000 on, yeah, it's kind of crazy to think about, really crazy. So if you have 5-10 shares, like, it matters. It all matters. Here is actually a simulation of it. Shout out to these guys. I didn't shout out the other guys. This is I Am the Walrus. This was actually the price action from that short squeeze. Let's see, is this, how's that look? Yeah, you can kind of, you can't really see it. Kind of see it. So this is down here showing heaps of Bezos. So how many shares you had if it was in GME, I think. I'm not too sure, but this is kind of interesting. Oh, it's 9 minutes. Holy smokes. I thought it was looping after like 2 minutes. But so I guess it's squeezed. I won't go through this whole thing. It's squeezed, and then he said, I'm going to recall my shares over the weekend. And then it, like, I guess had like a plateau, and then he said that, and it just like did a double squeeze. But 10,000% is a lot. Here's RKT. Many of the reasons why I'm long on it and why it's cheap. They announced that they're probably going to be doing a share buyback. They've got billions in cash, and they basically said we have nothing to spend it on other than dividends and our shareholders, because it's undervalued. So we're going to do a buyback, and we're going to offer dividends. And so last time GME offered dividends was right here, and I think it was to shake the shorts out, and I think it worked for this day, but then I think they just heavily shorted it back down. So some stocks have a hard time shaking the shorts, and I want exposure to that. This guy's got 500 shares, 100 call options. He's got it for 2022 January. Mine aren't that long dated, but mine are further out of the money too. Whatever. And then put options. Okay. One true. Mother of all short squeezes. This is kind of AMC against GME. Just kind of a quick thing, because I know a lot of you guys, or some of you guys, are AMC people, and got, you know, it doesn't matter to me what you're shareholder of. You can make money in anything. I made money with AMC also. But when you think that they're the same, they're not the same at all. AMC and GME, or really GME with any other stock. Reported 226% short interest. That was reported, and that was on the Robinhood filing when they were for their lawsuit or whatever that just recently came out. And so it's probably much higher than that, but that was what that was just reported. Even at that point, they also said it was only 140%, which was the maximum you're able to report. But this came out on a legal document saying 226%, but again, probably much higher than that. AMC, I don't even see it. Where is it? 78%. So yeah, that could be manipulated also. That's true, but that's a much smaller short interest. Share offerings. Yeah, GME has offered a little bit, 12% increase in shares to build capital to basically change the world or just change e-commerce and GameStop. And AMC offered 220% increase in shares. They more than doubled their float size, which is it's a big payout for them. So not only do they do that, as far as a squeeze goes, there's no the float on AMC is much bigger, and it'll be more difficult to squeeze. And I think the squeeze has already happened, and I think that squeeze was maybe just all orchestrated anyways. GME paid off their debt. AMC still has 3.6 billion in debt in a dying industry. Gaming isn't dying. Brick and mortar used games, yeah, most likely, but that's GME's changing from that. GME's board is being compensated in shares. That's a huge one, and this board now consists of Amazon executives and Chewy executives and people that came over from high-paying jobs in the biggest retail company in the world to work for some stupid little brick and mortar company. And they said, you know, we don't need money, we'll just take shares. So that says something. Popcorn awarded their board 8.3 million in bonuses. Hope there's extra butter on that popcorn, even though it was cheaper. It's mathematically a cheaper deal by market cap. AMC holders, I've talked to some, they don't really quite understand. They think since the stock price is cheaper, it's a better deal. So just that right there, if that's the shareholder, I'm like, all right, that's probably not what I want to be investing in. Adam Aaron sold 230 million. Yeah, that's a nice little right up here. I don't even know, Fat Boy Tattoo, whatever his name is. I remember it's been done before, but I decided to check total shares traded year to date compared to outstanding shares among some popular companies, chosen semi-randomly. This is by Kate Clockwork. This is really interesting. So this is how many shares were traded in relation to their float, I believe. Or is it compared to outstanding shares? Yeah. So, I mean, given this is mostly from January and stuff, but isn't that insane? Like, wow. Thanks for watching, guys. Sub up, like up, comment down. Happy Monday, 6th round. See you tomorrow. Squeeze is coming. At least a squeeze to 350. We'll see if they can knock it from there or if we will rally and continue on. These are my windows. Watch my other video if you don't know what these are. Peace out.